Welcome to Beat the Banks, ladies and gentlemen. I'm your host, Chris, the DeFi Professor. We have a lot of things to talk about. Yes, this is just for the lulz. Shout out to our friends at LinkedIn. We are live on LinkedIn for the first time ever. We're going to talk a little bit about, really just a lot about the SPCX IPO. There's some other things we can definitely talk about. This is our weekly podcast where we talk about ways for you to become your own bank and beat the banks. Now that I say that, I realized I forgot to go pull up the arena. So shout out to the arena on Avalanche. I'm just getting the word out there. Hopefully that means that it should work. We're about to see if it works. It's been quite the week, guys. I was talking about on our community call, on our member call, we were talking about ultimately the disinformation that's going to be combated for the next 5 hours, roughly, right? Because we have a SpaceX IPO that went off today. We didn't get the Anthropic one. Not that we were expecting that today. Obviously, that would be kind of an interesting day, but one second. But this IPO has been good for a lot of people who were apparently employees of SpaceX are the big winners. We'll talk a little bit about that as well. I know a lot of people are curious to see, because I guess this makes Elon Musk the first trillionaire in the history of the world, I think. One thing to note is that most of his income is in stock in his company. So in order for him to actually recognize that he has $1 trillion in the bank account, which means he would have to liquidate all of his stuff, and that would cause value to drop badly. So that wouldn't necessarily be the case, but then that's kind of the case for a lot of people that have a lot of money. So let's pull up the screen. Okay, so this is on markets.xyz. This is trade.xyz, one of the multiple HIP3 markets that are available on Hyperliquid. Whereas you can see by the date here, they've been trading on SpaceX for quite some time now, since, well, the pre-market started back on May 18th, looks like. And some of you may be wondering, how are they able to do this? Well, we've done a show on perps previously. A perpetual in DeFi is a derivative digital asset whose value is pegged to the value of another object, another asset. In this case, it was to the potential value of the price of SpaceX as a token. And it allows you to take leverage, long or short. And we've had a show on perps before. You're more than welcome to go back through my socials and find that specific episode. We'll do perps again sometime in the near future. But people have been trading on the idea of what the price or the exposure to SpaceX could be here in DeFi for quite some time. Now, for those of you who are curious if why we do this type of thing, it's because in the world of digital assets, I'm not going to call it crypto, in the world of digital assets, there's always a fair amount of speculation. Anytime one second, sorry, my wife is messaging me. Oh, wow. Sorry, my taco hat was all radioactive looking. I'll take this off now. Because now you know what we're going to talk about. No way? Exposure is something that people are readily willing and able to put money behind. Now, the reason why people probably prefer to do markets here is because the IPO itself, you couldn't just get into, right? You could certainly try and fill limits if you had some sort of brokerage. I believe the retail interest in this topped $70 billion, which is, I think, the most ever in history, which is insane. A matter of if that got filled is a different story, right? Because different groups were going to be able to get in. Apparently, Elon pushed for 20 to 25% of the allocation to go to retail investors. So good on you, Elon, for trying to, get the little guy in, if you want to call it the little guy. But the majority of the IPO filings went to privileged users, right? And that's kind of the reason why DeFi exists. Why markets like Market or Trade.xyz and Markets.xyz on Hyperliquid are popular, because it gives you the ability to participate in the ability to at least get on the exposure without actually holding the asset. If it means that much to you to hold the asset, then you should have gone through like a financial advisor. I don't know how you feel about that. I think that's bullshit, if you ask me. I want to be able to invest in any asset, because if you've seen, was it Big Daddy with Adam Sandler? As long as you own one share, you have a voice in the company. Well, that's changing with tokenized stocks, right? Bringing stocks on chain, online. Whether you like the idea of it or not, it's happening, right? The ability to have one share that you purchased, regardless if it was on a stock market, on a floor, anywhere in the world, is on chain, is going to be the new future, right? High frequency trading. All of the technology underlying with Hyperliquid is faster than anything that's currently out there. To a degree. It's comparable, right? 100,000 plus TPS, transactions per second, on the Hyperliquid chain, which is based in Cosmos, by the way. It has to be in order to fulfill this this volume, right? And the founders of Hyperliquid are former quants on Wall Street, so they know exactly the technology they needed to make this successful as the premier decentralized exchange in this industry. And you can certainly bring up the asterisk or the decentralized exchange portion of this, because to this day I think they still own the majority of the validators that are on the Hyper BFT model. But that should be changing soon. Regardless, being able to trade on assets without having to own them, I think, is just as powerful as actually owning them, right? Because you can just offload the exposure if you need to. With that said, you had the ability to purchase them on chain through certain providers. Turns out that Xstocks through Kraken and Bybit was not one of them. So, Xstocks is bringing a lot of the ability to trade stocks, traditional stocks like on the US stock market, on chain, on Solana, and Kraken is the CEX point for that, since they acquired that company under their mother company, Payward. They were unable to deliver on the underlying assets, meaning owning an actual share on the other side of trying to get in the IPO. So they did not receive an allocation Subscribed users will not receive them. 100% of subscription funds will be automatically refunded to your original funding account. No actions required. Kind of crap, right? Woo blockchain, normally a scooper here. It looks like it came in below expectations. Community feedback indicates that all users whose subscriptions were successfully allocated on Kraken all received the same amount, 4.2. 4.2? That's it, 4.2 shares? Wow. I will say this, and shout out to Adam Koo. I thought this was interesting. He brought up Warren Buffett's thoughts here, right? And of course, who was ever able to get in, congrats. Looks like LinkedIn is now broken. Thank you, LinkedIn, for watching. I appreciate you. That was fast. Great. It makes no sense to buy a security precisely when an insider decides the timing is perfect to sell. Frankly, it isn't worth spending 5 seconds thinking about IPOs. That is from arguably the best value investor of our time in Warren Buffett. People asked if I was going to be on this. I'm like, no. I don't. It's great to get in super early on IPOs if most people don't know about it. But when there's $75 billion of pre-allocated exposure and commitments to the IPO, I don't see where I win at all in that standpoint. Although, credit to them, right? If we bring up the CBBTC USDC back up to 104%. That's great. $163, right? The initial offering price, I believe, was $135. Yeah, the IPO price here was $135. They're well above that, right? So we're up 21% on the day. There is someone who is out there who publicly put out that they're doing a 20x short on SpaceX with $5.7 million. No idea what their liquidation price is or anything like that, or if they had to cover their short. Maybe they did. Who knows? But there are a lot of people who thought that this wasn't going to last, right? Much like with what happened with Circle's IPO, which at the time was probably the biggest IPO, at least in the history of the fintech and crypto and digital assets. Not that SpaceX is kind of in the same boat. I mean, if anything, I just thought it was ironic that Musk can now cover the losses from X through the XAI merger into SpaceX. So, yay. There's that. We'll see what happens now that this has happened. Does he step away from X as in terms of leadership? I don't even think he's the head of X anymore, right? He brought in somebody. Regardless. Shout out to No Limit Gains for this. Insiders get to sell in tiers starting much earlier than the standard IPO. August 11th, 20% unlocks, another 10% if SpaceX trades 30% above. So 175. Interesting. Elon and certain major investors get a longer 366-day lockup, and they're locked until around June 2027. 180 days, December 9th, everything else unlocks. this is this is kind of what we're. This is not bad. This is not bad at all. It could be what we call a bullish unlock in this space, right? A matter of if it unlocks, it just drives more buyers to come in and purchase those shares that people are willing to sell, because there's a there could be a real, and TBPN, shout out to them, they got acquired bigly, obviously. 2.6K on their GigaStream for the IPO. Again, we're not going to spend that much time on it, but just wanted to kind of talk about the DeFi portion, because do I have it here? Yes. Because shout out to Backpack through Solana and Sunrise DeFi. Shout out to them. Congrats to them, right? They actually have an official, because they were able to get the allocation. Why? Because Backpack is also a securities exchange. They were able to get the FTX portion that got lost in everything that went down. So shout out to Armani Ferrante and team. They do have a 1-to-1 redeemable SPCX tokenized share thing available. So if you're curious and you want to buy it now, you can directly on Solana. So there you go. Oh no, I'm out of drink. So this is the difference between a tokenized share and a regular share. And this, to me, this is the most important part of what's happened. This is the most interesting part of why this matters. We could be looking at an inflection point, like 2-3 years from now. Who knows? The goal was to get every type of stock, equity, bond on chain. This is a very, I'm not going to say bullish start, but a really good case study for how it can be done, right? Because Larry Fink, the CEO of BlackRock, is looking to bring all of this online, to democratize. The word that's been used for this is to democratize the IPO, right? Because Elon had to mention that he had to fight for 20-25% from Wall Street to be allowed to be given to everyday retail users. Now, I say this with regards to the context of the Beat the Banks podcast, because when you are your own bank, now you're in a situation where you're looking for opportunities like this, where you can get in early on projects with IPOs at a grander scale. Where you can actually own at least a tokenized stock. Now, this is different than the primary secondary market ownership that you see now, currently, with projects that start off on chain, like on Solana or Ethereum or other blockchains. And then as they gain market cap, as they gain product market fit, as they gain community sizes, listings on CEXs, that's that initial push into what becomes a secondary market at the CEX and traditional FI level that people can include themselves in later on. We're going to see less of this and more of this, right? This is the future that a lot of the traditional finance that are now integrating into DeFi are going to be living on. No more of this 24/5, or it wasn't even 24/5, right? This is an improvement for 24/5. We're now at 20. We're going to be going to 24/7. So markets, global markets at all times available with redeemable shares. This is going to be specific, I think, important for dividend investors. So if you are someone who is into dividends, you want to be able to purchase fractional amounts of shares. That's the other part too, right? You have fractional actions available. You don't have to buy one share. You can buy 0.5 or 0.85 or whatever you have to hold. Tokenization is something that that brings that fractionality to the game that a lot of people are very interested in, right? Because there was a company, I forgot the name of it, that allowed you to buy percentages of shares on the U.S. stock market. So if you couldn't afford one share of Berkshire Hathaway B or Apple, Amazon, you could just buy a portion of it and have that available. Pardon me. Ooh, allergies. But yeah, to me, this is an inflection point, right? This is going to be a huge deal. Looking at the markets real quick before we talk about more BTB, beat the banks traditional talk. Interesting that this says we're up on the 7. I mean, I guess we technically are. We've had some severe bleeding due to a couple of things. I think a lot of people were selling Bitcoin because they really wanted in on this IPO, right? I think that's where a lot of that went to. There's a lot of people who also were de-risking, just as a habit due to that. There's a lot of de-risking due to the geopolitical tensions that are happening, and the signal that SpaceX, that MicroStrategy was selling Bitcoin. Now they've already mentioned why they were doing it. In fact, it's probably taken out of context. There's a tweet I saw earlier this morning that said that Michael Saylor was telling someone, I was telling you not to sell your Bitcoin. I never said the company couldn't sell their Bitcoin, which is, I was like, I don't know if he was taking out of context there, but that is not a. Well, that caused a lot of people to start to wonder about the ability for Bitcoin. Now, this is in the face also of Mythos coming out, multiple issues with Web 2 companies, even an issue with Arch Linux. There's a supply chain bug where a rogue developer has overtaken old repositories and can now infect AUR supply chain things. So that's no bueno at all. It's hard because it's like in the world of Mythos and just the ability for AI to provide hacking tools, I guess, both to penetrate projects as well as for white hats and other ethical hackers to defend against issues. The defending part was, I believe, the true purpose of Mythos. Unfortunately, it's also being used for bad, which is annoying more than anything, right? We should be using technology to improve our lives, not try to build things to extract value from other people for the purpose of becoming, much more rich. We saw this with shiny hunters, right? Going after Canvas and all of these places that didn't have proper operational security or bugs that they had not fixed in their software, which caused ransomware. I think they made like $12 million off of Canvas or something like that, because it was connected to so many educational institutions. So I don't think the pain is over for stuff like that, guys. If I'm being very honest, I think it's only just going to get worse. So when we first had the initial issue with all of these supply chain attacks, once it died down a bit, because one thing that's great about at least being here in this space is that the system is for the most part somewhat self-healing. So as exploits happen in smart contracts, they get patched and they get stronger. It's harder and harder to hack most of the smart contract infrastructure within DeFi. Anything we have seen, and we'll talk about humanity here for a second, what is through bad operational security, which is something we talk a lot about on this show. Now, I did see on Bubbles, and let me bring Bubbles up here, and it looks like it's on the hour, that humanity is up 25%. And a lot of that is based off the idea that they have come out with an incident report, and because the token itself plunged like 90%, right? The idea of humanity is to provide a zero knowledge proof system that can prove that you are you. It had a lot of really great, had a lot of really great backing behind it. And unfortunately, as they mentioned, that's all it's going to say. You're not going to... There. On Ethereum and Binance Smart Chain, it was a large amount. $21 million in ETH. The number is well over 30 million, if I'm not mistaken. The attacker phished Mr. Chong, installed remote access malware in his Windows machine, and stole the keys used on chain. The developer has pardon me, has laptop compromised. He clicked on a bad link. He clicked on a bad link. That was oh my God. That was an Excel file? Why do we do this? Why are we still doing shit like this, guys? Ugh. Unreal. Why do we still do business like this, guys? Now, clicking on the bad link. Caused that. However, there's thoughts that this was an inside job, mainly because there was an upgrade to the smart contract that will allow for a supposed backdoor to include the draining of the funds. Anyway, I'm not going to go into that here because that's just all that's just a lot of people talking about it, but I don't know. Honestly, when a token plunges this far, as much as 90%, there's no coming back from that. That's just my personal opinion. So maybe something else comes back in its place. There are multiple projects looking to do something like this, and it is a noble cause, right? Because especially in the world of LLM based, or what we call AI slop, it's hard to know what is real and what is not. I can prove to you by my inability of being able to talk much because my throat is dry because of allergies. I am a human being. Okay. $400 million market cap already. Crazy. Crazy, crazy. They have their own chain. This is not real. Yeah. Well, maybe it is, but I mean, look at the score now on Ethos with their credit. Not a good sign as to what that is. All right, let me load up the other portion of what I was going to talk about today. But yeah, congrats to anybody who got in on the SpaceX IPO if that was something you were looking to do. Just the idea that we've been able to revolutionize how you can get into an IPO subscription, and hopefully in the future we won't have this prioritization with financial advisors and family offices and all of these things, and anyone would be able to come in and purchase IPO shares. The fact that a big deal was made that Elon was able to get even a minimum of 20% allocated for retail investors just kind of shows you how, frankly, backwards this process is. But if 75% of the shares were promised to quote-unquote early investors, dev friends, and family, if you want to call them that, that just kind of shows you how backwards and broken the system still is. Hopefully we, through the movement of all of this, through with Backpack, with even with the failed attempt by X stocks to really be able to fulfill their allocation, their attention for allocation, I guess would be what I would say here. That would be the key to seeing more of this happen. So now that we saw what happened with the SpaceX IPO, hopefully from a self-custody standpoint, this opens up more IPOs with, better opportunities for everyday people or people who are like us that are using self-custody to be able to participate in these IPOs. Obviously, it's a very speculative event. No idea if it goes up or down. I'm sure there are many people who sold already, up 22% off their $135 price, and happy with that $25 gain on every share they were able to buy. That's, in a lot of ways, what people always want. Now, was SpaceX ever going to go to like $1,000? That would have been highly unlikely, in my personal opinion. But it could be something that could have happened. Just reading this post from Cash. I think it's an interesting sentiment, right? The crypto chart here, and fear is back up past 15 to 18 now. That's a good sign. As we're on the eve, or on the precipice of hype flipping Solana at this point, Monero making a run again, interesting. Zcash back up after the Orchard issue, and now with the new Ironwood pool for shielded transactions, could be interesting. We run into the interesting case for ADA. And I don't know how many of you are Cardano fans out there, right? Let's zoom out a bit. Back when I used to tease on this podcast that ADA is the worst, is the most unproductive stablecoin of all time, right? That was a fun joke in most of 2025, but in 2026, it's been not so funny at all. It even led to Charles Hoskinson, the founder of Cardano, to mention he wanted to take a break because he wasn't sure how to solve the issues that they had, because one problem they had is that they had a vote for the funding that would have included multiple projects, the annual Cardano conference, stuff like that, and it failed. People wanted Cardano to possibly do a Polkadot and just kind of go for sustainable longevity type tokenomics. Well, this tweet from Cash, and he is a constitutional delegate for Cardano, and he's also a developer agency. And this is the type of stuff you don't like to see, right? Bunch of scrappy, smart people building the future financial rails of the world. I mean, as a developer, I could kind of go into some reasons why I didn't love a lot of the choices that Cardano made, such as having Haskell, which is it's a fine functional language. I just don't know why someone who is a co-founder of Ethereum wouldn't have just kept Solidity, or something like Rust or WebAssembly or something of that nature, available to try and attract as much talent into the space as possible. Yeah, you see people. I'm not gonna say he's crashing out here. It's just unfortunate that he had, he said he had to sell ADA to save his house. And now he's asking why should he keep trying to build in Solana after giving up most of his 20s. I'm sorry, his 30s for this. And I totally get the pain here. People are telling him to go to Solana. I don't know if it's much better there, honestly, at this point. There's just a lot of problems that need to be solved, a lot of sentiment, a lot of foundations need to get behind their builders and keep this vision of decentralized finance where it needs to go. The Ethereum vision, for the most part, is set, right? They've got a foundation for it who owns very little ETH with regards to how much exposure they have in terms of representing the actual protocol. But they've got a lot of great projects using Ethereum in the short term, right? You've got Swift, you've got tokenization on multiple EVM compatible L1s. Even with Solana, that's also, set with their RWAs, things like that, all being based around Ethereum or Solana, depending on which way you want to go. Agentic things are happening on Solana and Ethereum. That's not going away. How do you make that same argument for Cardano, for XRP, for Algorand, for Near? Now, Near and Algorand have some interesting traction because they're going to be probably at the forefront of quantum, specifically for quantum preparedness. One website I would definitely recommend you check out is pq.ethereum.org. So you can see specifically how Ethereum Foundation is going to address what's going to happen with their quantum preparedness. It is going to have to lead to some major hard forks to get up to that point. Q-Day at this point, roughly around 2030, 2029 at the very earliest. But most people have it at 10% by 2030, 50% by 2032. So somewhere in that range, which is, 3 years from now. Depending on what happens. Could come sooner, could come later. But there is some options happening here. And I'm mentioning all this because banks are also doing the same thing, using SO2 and SOC2 and NIST and all that stuff. Because the government has Q-Day around 2035. I think that's way too long. I think things will happen much quicker than you think. I mean, we have Will Smith eating spaghetti in a shorter amount of time from AI. You can look that up. It's actually a very fascinating evolution in how well AI-based video generation has become due to the original experiment of Will Smith eating spaghetti. This is something that has to be solved at all levels, not just in DeFi, also in fintech, also at the bank level. Things that are, and they're working on it. In some cases, there are some ways that they're already ahead of the curve. There are some that they're not. Most banks still use SMS 2FA, so that if that's a problem in itself. Uh, so we'll see kind of how this evolves. But having quantum resistant signatures and data infrastructure is going to be something that everything is going to have to upgrade to, based on the work within IBM, with Google, and others that have this technology and their ability to break cryptography. What was once just maybe one day is now a less than 5-year reality. So, not saying people need to freak out, but just be ready, be prepped, diversify where your funds are. And that's why we talk about beat the banks, because you shouldn't be putting 100% of your funds into a bank, because they're making all the money and just giving you pennies. Because banks make like 4 to 6% off of you and your deposits. Tell me how much you make on your checking account. Go ahead, I'll wait. Put in the comments. I can tell you mine is 0. Shout out to Payduck in the arena chat. Now, there are products like high-yield savings accounts. They're fairly new. And generally, when you sign up for stuff like that, there's like all this KYC overhead, which is fine. You can't be expecting to not have to come in with information to prove who you are and to be able to access the infrastructure to fund your account, right? But in the world of DeFi, you just have wallets, and there's no data tying you directly to those wallets unless you ask for it to. Now, certain on-ramps and off-ramps will require you to identify yourself in your wallets. That's up to you if you want to embrace that infrastructure. You don't have to. Privacy is in spaces, in spots that can shield a lot of that stuff away from quote-unquote prying eyes, right? At some point, it's going to become the everyday. Right, and the reason for that is, let me see. Yep. Is because of this. We're not going to go too deep into it because it's pretty in the weeds, if I want to call it that. But the future of user experience, if you watch the Google I.O. keynote from this year, their developer keynote, are AI agents. AI agents are just scripted robots that can go out and act on your behalf in certain things. We saw the whole OpenClaw thing, if you're familiar with that. That was a framework that allowed you to have your own virtual AI assistant. And it did a whole bunch of things that it could do because it was connected to what are called MCPs and skills. MCPs, or Model Context Protocol, is just a gateway to allow scripts that have access to talk and share data back and forth through various applications. It's like an API, an application programming interface for developers to tap into, so they can easily, like if I wanted to create an app that talked to your bank and they had an API that was available, I can easily connect to that API with my program, and then I have a specific set of interactions I'm able to use through the API. MCP is very similar. It's just more for what we call autonomous agents to take care of this for you. Now, the reason why this is important based on the context of what we talked about today is because someone got phished. A human error here, right? Whereas stuff like this most likely won't happen at the agent level unless there's some type of smart contract exploit. Something that involves tricking an agent, which possibly could happen, or in the case of a supply chain bug, kind of like with what's happening at Arch Linux. There is something that's causing something within the underlying part. But the agent is meant to be something that runs on a very specific amount of parameters and does one or two things very well without any need for rest, any need for other types of permissions and at the expense of being able to do anything you want instantly and with very close precision repeatedly with no issues, right? An agent's not going to fat finger unless you ask it to, right? But the idea that you now have agents that can interact at the centralized exchange level to trade, pay, and execute workflows on your behalf with limits you control. Available today as a CLI, which is a callable level interface or command line interface, as also, which is like just a terminal, right? So I do use both Claude and Gemini CLI here on my development box, where I have a lot of my agents working. And then the MCP is the model context protocol. So you can just literally point your agent at the MCP and it will gain a bunch of access and knowledge to do different things for you. So this is not new, if I'm being very honest, but the access to do it is, the barrier to entry is much lower now, right? Because with this, you can have agents do portfolio rebalancing for you. So if there's a trend that pops out, you ask it to set 2 to 3% stop losses or trailing stops, and it hits those. It'll automatically do that and rebalance it. In this case, if you want 60% BTC, 20% ETH, and 20% SOL, you can do that through aggressive DCAing, buying the dip in this case. These are all things that can be done by your agent without you having to worry about it. You just fund it, set and forget, come back to it, monitor it every week. That's the beauty of agentic finance. One thing about Coinbase is that they partnered with Perplexity, a very popular AI platform, to index every single trade Coinbase has ever done in the last, I think, 20 years. It's all trained now in Perplexity. So you've got all of that. And I guess it's available. Oh, that's what Lincoln's been up to. Lincoln Murr, shout out to him. But yeah, because Coinbase Advisor. Now, this is through Coinbase, meaning that you have had to have KYC'd or presented your picture, your driver's license, and all that. Let's say you're not a Coinbase customer. You live somewhere where Coinbase isn't available, or Coinbase is a company that you don't want to be associated with. You can do it on the Base blockchain, at least on the Aerodrome platform, utilizing Aerodrome agents. If you're wondering what the relationship is here, from a DeFi perspective, Coinbase uses listings from Aerodrome. They list a whole bunch of assets that are available on Aerodrome as the leading DEX on the Base blockchain, the leading decentralized exchange. Coinbase has all those listings now available to all their customers, either on Coinbase.com or within the Base app. They also have, thanks to their relationship with Jupiter, all of the tokens that are available on Solana, also available there. So if you want to try this out, you can certainly do so by going to Aerodrome's Twitter. Look at they have what's called the Sugar SDK. You can add an RPC, which there are multiple RPCs available. I think there's a couple that are free, like Chainstack. Infura may have a free tier. There's a bunch that are out there. And then have an agent connect here and get started. And then you have all of the comment bots that are available. Local first, real-time on-chain calls, full privacy. I mean, that all depends on your setup, but I run all of my AI inference locally here on a repurposed Windows PC, specifically for that. It runs local models. All of the things that I use AI for with my agents are done here on this box. They do have access to call out to the internet as needed, but it's very limited to what they can do. You could create an agent that just does trading on Aerodrome for whatever you want it to do. So really cool with regards to beating the banks and having a way to have a flow for trading taking the profits from that, putting those into either fixed rate farming, something we love to do, or possibly even using it for getting into aerodrome pools with USDC to farm your profits. Because that's probably the other thing that you probably want to double check on, is specifically how are you going to take profit and then do more with that. And if you're curious about the best way to take care of that, that is where our group comes in. Shout out to all of our members at Total Value Locked from my company at Beacon DeFi. And you can get there at school.com/beacon. Completely free to join. Shout out to all of our Beacon Mastermind founding members, our current Beacon Mastermind members, as well as our Spotlight subscribers and Beacon Challenge subscribers. You guys make what we do possible, so thank you very much. Much love and respect to you all. It's completely free to join our group. Check out our Start Here post to get a message from myself and our CEO, Andrew. Right here, this Start Here, you cannot see my cursor. Interesting. But when you click on the Start Here post, you'll get access to, you'll just get a message, and you'll also get links to quite a bit of our free, well, all of our free content, as well as more knowledge about what we do for some of our paid offerings. So if you want one-on-one mentorship from myself on how to get into this space and be a safe and secure DeFi native, certainly reach out. Happy to help out where we can. So let's kind of go over what we talked about today. First is the SpaceX IPO. We'll get to this in a second. SpaceX IPO. Excuse me. Currently trading Oracle-wise at 161. Roughly about here. Oh, it closed at 4. After hours starts at 4 here. Okay. Well, we'll see. Interesting with the partnership. I forgot about this. Coinbase and Yahoo have a partnership that allows you to have access to that. But if you want full-time markets, you can check out Backpack. Shout out again to the Backpack team who have tokenized SPCX available also through Sunrise DeFi. Shout out to that. That makes not DeFi compatible. Well, yes, DeFi compatible, but DeFi composable, which allows you to also use it throughout Solana blockchain with multiple types of what we call composable strategies. So we call money Legos, where you can put strategies together to get fantastic yield and return on your investment. So that's going to be a thing soon, I'm pretty sure. One thing you can also do is, hopefully soon, is because Solana and Base have a very good canonical bridge, soon you'll be able to bridge that over to the Base blockchain, and then from there utilize multiple strategies on the Base blockchain side, maybe on Aerodrome or something like that, with tokenized SPCX. To my knowledge right now, based on what's going on, this will only be on Solana. So you'll only be able to redeem it through Sunrise DeFi on Solana for your real SpaceX shares. There's a whole process for that, guys. You're going to have to KYC for that. That's just a given. So if you want to play this specific game, you're going to have to KYC into that. If you'd rather not deal with all that headache, because you're also going to have to report that on your taxes, just as a heads up, you can always go through something like Trade XYZ or Markets.xyz in the Hyperliquid realm, where you're dealing with what are called perpetuals. And I'm sure at some point they'll have a spot market, but it'll just again be spot on the exposure. The perps are more for the action you can get through limits and other types of leverage plays available with perps. The difference, so the best way to describe a perp, besides it being a derivative asset with exposure tied to the value of another asset, it's often compared as a DeFi option, where the option never expires. That's the other way. Well, we can talk about, you know what? Let's do a perp episode of Beat the Banks next week, so we can kind of talk about that if you're curious about how perps work. It's a really novel concept. Hyperliquid by far is the biggest perp DEX in all of fintech at this point. The CEO of NASDAQ called, the CEO of the Intercontinental Exchange that oversees the NYSE calls Hyperliquid one of the best things he's ever seen in his life, which has caused hype to, hit an all-time high. We had access to hype when it was $2, and it hit $75 last week. And somebody something on a space yesterday. Shout out to Andrew from World Mobile. We're going from RWA's real world assets to RWR, which is real world revenue, which is what a lot of people are wanting out of their projects now. So Hyperliquid's making hand over fist tons of money every day off of fees. The PerpDex world, which I credit to GMX, shout out to GMX for bringing the world of what we call real yield into the space, where you don't have a speculative downward facing spiraling asset, a reward token. You actually have real world assets where you get an actual share of platform and protocol revenue through your actions. That's where Hyperliquid has arisen and just pretty much eaten everybody's lunch. So just be careful out there. I'll bring this up again. This is quote unquote Iranian. They have tons of followers, but we're coming up to the top of the hour where we are going to get an update from President Trump on where the markets are going to go. Why? Because the markets are now most likely going to be closed in a couple of minutes, and cannot really fall prey, the U.S. markets at least, to the manipulation that's about to happen here. Because I've said on many of my streams, and if you guys go back, even watch my Monday personal stream where I do research, I've mentioned now for 2 weeks, it's going to come down to one of two things: either a supreme act of humility, either by the U.S. and Israel or Iran, or it's going to be a supreme act of force from either the U.S. and Israel or Iran. Due to the relationship between Israel and Iran, Iran will never allow a world where Israel has a nuke and they don't. That is now very clear. Again, not financial advice, not political advice. I'm just telling you, calling it as we see it, right? Iran has enough drones to last them for more than a year at this point. Thanks to countries like Ukraine, Iran has a very capable military drone force. I think they're called the Shaheeds, the Shaheed class of drones that they have. Trump is threatening to take over Karg Island, which, is 90% of, I guess, 90% of the oil coming out of the Strait of Hormuz. He says they're going to take it Venezuela style. If Iran has tens of thousands of drones, guys, and whether they do or not is irrelevant. They've been able to hold the U.S. at bay for months now at this point. Something's either going to break. Either the theater that this is or the rest of the world's economies. And we go into a global depression, which nobody wants, by the way. So now we're going to be at a point where either a supreme act of humility is going to happen, or we're going to enter some type of short-term world escalation. And frankly, I think we're heading to the latter. With that said, be very careful with leverage. Obviously, if you are a savvy, what we call day trader or swing trader, and you're good at this stuff, continue cashing in, because you're going to have plenty of opportunities to do so. If you're a regular everyday investor, just stick with stable coins and yield farming like our communities are doing. We're riding out the waves. We're grinding out all the yield using stable coins, using fixed rate farming, using safer, less speculative mechanics, because there's way too much manipulation going on. I am fully expecting within the next 40 minutes we're going to hear a message that is going to continue to quell the markets from whatever this is, right? Whatever this level of manipulation is. Because here's the WTI. If we go to US oil, which I believe, yeah, is available from Kinetic, from markets.xyz. We're up at a 125 on US oil with regards to where the price of oil is going to go. So regardless of what happens, we're going to still have the effects, the butterfly effects, right? Because the reduced amount of oil barrels going around the world, multiple countries running out of reserves, other things that come out of this trade, natural gas, helium, fertilizer, a variety of things that are beneficial to world economies are now, they've been constrained. It's now just going to get worse. What happens? I'm not really sure. It's not going to be pretty either way. Just be very careful. This is why self-custody is great. Pardon me. And you can do so with a much more level of technicality than was previously available to what we call groups of people who are into mattress money, where you take money and you store it in your mattress, right? The worst part about it is that with mattress money now is that holding the US dollar, you're losing value year over year due to inflation, due to money printing. That's why people are running to digital assets. The idea that you can have anti-fragile, censorship resistant stable coins that are pegged in various world currencies, whether it be the US dollar, whether it be the euro, whether it be the Swiss franc or the British pound. There is stable coins for all of those available. Even the UAE digital dirham, the dirham from Dubai, all available as different stable coins that are available, along with a full cadre of yield-bearing strategies that you can take anywhere with you. Regardless of the way that you feel about it, the beautiful thing about DeFi or decentralized finance is that no one country owns this flow, right? The US can talk about all they want about who is and who doesn't control the power of crypto and AI. In this arena, it doesn't matter. If it makes you feel any better, the US president is one of the richest people in crypto. Because he knows that no one country owns any of this. The blockchains, the NFTs, the perps, the infrastructure, all of it. It's all non-sovereign. And then now you can quote his old thing about the fact that he never reports his tax returns. Either he's hiding something or he's just a smart investor, as he's been quoted on the record for saying. The point is, you have your ability to do this as well, to be your own bank, take control of your financial freedom, and do so in a world where you can control how your hard-earned money is being spent. You don't have to leave it up to a bank who is going to do all this work that you don't know about and profit off it and pass you pennies. We're better than that, guys. We absolutely are. Banking won't die, but banks probably will at some point. Might as well be your own bank and take advantage of what's out there. That said, we do this show every Friday, 3 p.m. Eastern, here on these fantastic social channels. Shout out to everybody who is watching. LinkedIn was here for about 15 minutes, and then Twitter, Twitch, YouTube. The Arena was available. It is also gone. Oh no, it's still on. Cool. Appreciate you guys being here. Feel free to follow. Please like, follow, subscribe. We have some milestones we're trying to hit. To continue bringing this to you helps us get more of this info out to everyday people who need to know about it. Because it's great that we all know it, but everybody and their mother should know that this is not funny money, guys. This is where the future of finance and the future of business is going to be happening. See you next week. I'm Chris, the DeFi Professor. Have a great weekend. And I need to take some allergy meds because... Take care. 07. Beacons up. Banks down. Keep beating those banks, guys. Have a great weekend.